Tonight, the cost of insuring a home in California could soon dramatically change. For the first time, the state's insurance commissioner is moving to let insurance companies factor in future climate risks when setting new policy prices.
We are truly living in unprecedented times.
After decades of disaster, Insurance Commissioner Ricardo Laura says the move is aimed at keeping insurance companies from fleeing the state and homeowners insured.
There's no doubt that California is at an insurance crossroads. Making insurance more available is becoming critical for our entire economy.
John Eck of Eck Agency says he's seen homeowners' insurance rate increases of up to 15% this year.
Insurance companies pay out money for those disasters in Florida and California, big hailstorms in Texas. It's going to affect the rates here in Kansas.
You know, insurance is the best example I think we have right now, where you see these insurance companies that are pulling out of places like Florida and Louisiana and California because they can't charge enough to cover the risk. You know, insurance company has to charge high enough premiums so that when something bad happens, they can pay out. You know, if there's a 10% chance every year a house is going to be destroyed, your premium has to be 10% of the value of the house. And so they have to be able to charge those premiums. And then they run into the political problem, which is people can't afford it and policymakers don't, you know, that makes constituents unhappy. So policymakers go in there and they put limits on what the insurance companies can charge. And so then the insurance companies just leave.
State Farm joins AIG, leaving California's homeowners insurance market. Now, your options getting your home covered are even fewer.
With a new study projecting more than 39 million Americans could soon face skyrocketing insurance premiums, some insurers have already walked away from hurricane and flooding-prone states like Florida and Louisiana. In high-risk areas of California, many are already priced out.
Just received the bill and it's double what it was last year.
Once you lose insurance, the whole economy falls apart. You know, our economy runs on insurance. Can't get a mortgage without insurance. You know, businesses can't operate without insurance. And you know, it's the fundamental problem is the risk of damage has gotten really high. And when the risk of damage you can think of the risk as kind of your expected damage every year. And if your expected damage every year is 10% of the value of your house, you know, people can't afford that. You know, if you live a $300,000 house, that's $30,000 a year is your expected damage. Now, you don't get that every year, but every 10 years, you might get $300,000. So, you know, this is the cost of climate change. I think this is where the economists have really failed. You know, they haven't taken these kinds of factors into account. They haven't looked at how, you know, day to day, these costs are really accumulating.